Is it better to invest in stocks or real estate? Depending on who you ask, you're going to get a ton of different answers. But right now, it's time to have the ultimate showdown. In this video, I'm going to walk you through if you should be investing in stocks or real estate, which is better, which is safer, which is going to make you more money, and most importantly, which is best for you. But make sure you stick around to the end because I have a free gift for you that will help you make this decision and really help you grow your investment portfolio. Investment is both an art and a science. It's both objective and situational. A lot of times, it depends on who's at the driver's seat of which is the best to invest in. If you're going to invest in real estate with somebody that doesn't know what they're doing, you might invest in a stockbroker and they might have a lot more information, be able to make you more money. So it really depends on the situation, who's at the helm, and really what you have a palate for. Because the truth of the matter is, you have to really assess your risk tolerance before you make this decision. What kind of risk tolerance do you have? Are you a risk taker and do you feel like you can be riskier with your money and invest in things that have a much higher upside but maybe a little bit more risk? Or are you somebody who likes to play it safe, just wants to put your money in and watch it grow slowly and making sure that you have enough for retirement? Your personality will dictate a lot of this decision. At the end, I'll share with you which one I like and prefer, and then you can make the decision. But for me, the answer is very, very clear. So the very first thing, as I mentioned, is stomach for risk. You have to decide if a 401k is safer and you just want to put money in your 401k, let your employer match, that's safe for you. You don't have to learn a lot about investments to do that. Maybe you hate learning about money. I would tell you to become comfortable really learning about money to make sure your money's being taken care of just to protect you and your family. But the stomach for risk really comes down to two things. Number one, your age, and number two, your personality. Where you are in the cycle of life can depend on how much more risk you can take. If you're a 25-year-old single person, you can be a whole lot more risky than a 55-year-old who's taking care of their parents and maybe helping kids pay for college. Those two people are in complete different life cycles, and therefore their investment patterns and stomach for risk is much different. Now, if you have a little more taste for risk, real estate on a return on investment side is going to win every single time because real estate is going to always yield a better return than the stock market. However, it often can be a little more risky as people see it. Now, I don't see it as more risky because of the economic proof of history, but a lot of people see real estate and they think real estate crash. They see the stock market and they almost assume an up and down pattern of investment. And so in the real estate, they think it could crash, but in the stock market, they think, well, crashes are normal and they just come back up. But they don't seem to apply that same thought to real estate. The second thing you want to see is what really are your goals for investing? Is your goal to retire in 5 years? You're not going to be able to do that with the stock market unless you have a lot of capital. And if you have a lot of capital, you probably could retire now. So the truth of the matter is, you have to decide what's really your goal. If your goal is to retire in 5 years or less, you're going to be able to do it with real estate a whole lot more than you're going to be able to do it with the stock market. So you have to decide, where are you headed? Where do you want to be in 2 years, 4 years, 7 years, 10 years? And where is your family going to be? Because those goals will dictate if you just park your money with a stockbroker in the market, or if you start investing in real estate and start learning how to leverage real estate and the power that it brings. Because if you are investing in real estate for fast cash, there are transactional styles of real estate where you can make large sums of money. Transactional forms of real estate really fall in two categories: in fixing and flipping or wholesaling. Fixing and flipping is when you buy a property, you add money to it and fix it up, and you sell it for more than you have into it. Wholesaling is where you find a property, you don't do any work, you upgrade the price just a little bit, and you sell that to an investor who's going to do all the work. So you might find a $100,000 property, sell it to somebody for $105,000, you keep a $5,000 fee, but you don't do any of the work on the property, and there's still enough meat on the bone for that investor to make money. So if your goals are real estate, there are fast cash options in real estate where you don't have to wait 6, 7, 8 years to see a return on money. The third thing you want to think through when investing in stock market or real estate is your responsibility. If you're a single income with kids and spouse and you're the only form of income, you want to invest a little safer and a little more strategic than just throwing your money at anything you can find. And so this is really important. Stock market, again, you can park that money, have a stockbroker move that money around anytime the stock starts to decrease, and you can see your money continue to grow. For example, a stockbroker will take your money, invest it in something. If it starts to decrease, it pulls his money out really fast, sees something else on the rise, and then they put it in that. They watch it rise. Oh, it starts to decrease. They pull your money. They put something else on the rise. That's how they play that stock market. And you're going to get in the 6 to 8% as an average return on investment in money parked in the stock market. Real estate is going to have a similar return when you start in that 6 to 8%, but as you grow the value of that project, you're going to be able to sell that and jump into the 20%. But if your responsibility is a single income and all the income's coming from you, you want to invest in something that has a slower growth track. Because if you invest all your money into one project and it goes south, you can lose a lot of savings that you really need for your family. But responsibility should change your patterns of investing, not change if you invest. That's a big difference. When you have a lot more responsibility, yes, you want to change the patterns and risk you accept, but don't change if you invest. Don't stop investing. We have to keep our money working for us so we have enough money for the rest of our life after retirement. So let me hear from you. Let's comment below and let's hear from everybody. Would you prefer stocks or real estate? I think it's clear which one I prefer, but I want to hear from you. Stocks or real estate? Let me hear in the comments. The fourth thing you want to know is both have strengths and both have weaknesses. So stocks have strengths and weaknesses real estate doesn't have, and vice versa. Pretty hard to slam stocks completely when Warren Buffett, nearly $100 billion net worth man, has a lot of money in the stock market. So saying no money in the stock market is not what I'm saying. I'm saying that real estate is a better investment, but it's not the only investment. You can invest in some great stocks when they're increasing quickly, and you're going to see some great return on your money. So I'm not saying don't invest in the stock market. I'm saying if you're going to pick one, pick real estate because it's going to perform for you better every single time. So the strength of the stock market is if you can locate a stock that's on a strong upswing, you can see a major swing in revenue. For example, about 3 months ago, a friend called me and asked me if I had invested in Bitcoin. I looked at Bitcoin at the time. Bitcoin was worth about $23,000 a Bitcoin, and I looked at it, and now 3 months later, it's worth about $65,000 a Bitcoin. Now that means I was going to throw 10 grand at it just to see what happens. That means if I'd have thrown $10,000 at that, I'd have tripled my money in 90 days. That's a really hard track record to beat. So even when I say real estate's going to win every time, if you can find a stock that's doing that, you can ride that train, you're going to make a very good return. The problem is those are hard to find, and by the time the safety comes along and it's attracted enough people to prove an upswing, then what happens is it starts tailoring off because it becomes so expensive to buy, you're not really experiencing the revenue. And the fifth thing to think about on real estate or stocks is I like cash producing investments. The stock market's not going to really yield you a monthly cash flow while holding your asset, but real estate will. It'll give you monthly cash flow every single month, and you'll be able to receive that income and actually live on that income. Whereas the stock market, you really park it there and you just let it grow. That's the way it grows. For example, compound interest comes into play. When you put your money in the stock market and it starts to grow, then the money you make, it starts to make money on that money. And the more money you make, it starts to make money on that money. You have compound interest. You have to leave your money in to really get and take advantage of compound interest. It's not true in real estate because that money that comes out doesn't have anything to do with the value of the property. So that money it's paying you every month, you don't take a hit on the value of your property because you take that money. Where in the stock market, you would. It would limit the growth of the investment. It doesn't do that with real estate. The more cash you make, doesn't impact the value of the property. And real estate offers a couple things the stock market just can't give. Number one, forced appreciation. If I'm buying commercial buildings, I can dictate the speed limit of appreciation. You invest in the stock market, you're fully depending on that business or that stock to grow itself and the leadership of that team to lead well, or else you're not going to see the growth. In real estate, if I increase the income, I increase the value. So I can work and grow the value of that piece of real estate based on my own knowledge and expertise. And the second thing is depreciation. You can depreciate your real estate for 27 and a half years. So here's the powerful thing about real estate. Your real estate appreciates, but on your taxes, the government lets us act as though it's losing value. That's depreciation. So on your taxes, you can act like you lost money in your deal because you can depreciate the asset, but in reality, it's appreciating in value. It's one of the most powerful things in the world. And you can depreciate that property over 27 and a half years. But there's something called cost segregation. Cost segregation allows you to speed up 27 and a half years of depreciation inside of 10. So if you only own a property 5 years, you can act like you've depreciated half that asset out. That'll take you almost 14 years to do, and you can do it inside of 5. So you can speed up that depreciation and see a lot of savings on your taxes. So in the ultimate showdown, I believe real estate takes it every single time. Again, let me know in the comments, which one do you think takes it? Because I want to see where the showdown lands in your mind. I believe everybody should be investing in real estate and be earning revenue. But I believe everybody should be investing, period. If you don't have a stomach for real estate, then get it into the stock market. Get it somewhere where you can start making money on your money. You owe you and your kids in generations to come to handle our money well, because people are depending on you. I also want to give you a free gift today. Because I believe real estate has won the showdown, I want to give you a free 60-minute multifamily masterclass for free. If you go into the description, you're going to find a link, freemultifamilymasterclass.com. You click that link and I'm going to walk you through a 60-minute training of how to bust into the real estate market.